everyone. This is Mish Schneider, Chief Strategist of MarketGauge.com, and I'm coming to you on Stockcharts TV to kind of give you a breakdown of where things are at right now. And we all know it's a little bit confusing out there. For one, we have obviously a situation where we continually making new all-time highs in the growth stocks and in NVIDIA particularly, but also Nasdaq and the SPY. And then you have the gross underperformance of my beautiful economic modern family, which does include semiconductors. So we'll take sister semiconductors out of that. So, the question is, are we going to see a catch up in some of these underperforming sectors and index? Or is this mean that we're getting to the top of the growth stocks and the big tech? And of course, I don't think we really know the answer to that question. There's a lot of information out there about seasonalities. Market breadth, of course, is very much mixed with, I'd say, more on the risk on side than the risk off side at this point. And of course, we had good old Jerome Powell saying basically what he always says, which is if things really fall apart, he'll lower rates, but he doesn't think he's going to raise rates because he's not really seeing any kind of great inflation. And of course, my credo this whole year has been looking for inflation in all the wrong places. So with that, before we get started, I just don't want to forget to thank the Stockcharts team for having me on today. You guys are awesome. All right, so let's get going here with the Russell 2000. And what I'm going to do is I'm going to point out all of our ACP plugins because they all basically are what I use day in and day out to help me make determinations about whether or not I want to enter a trade and what that particular instrument looks like, especially to the backdrop of the macro that we just talked about. So if we're going to start with IWM, of course, we have to start with the idea that this is grandpa of the economic modern family, number one. Number two is you're going to see a bunch of instruments here. So let's go through it. This is all available to you on Stockcharts. And I think what I'd like to do actually is start from the bottom up. So if we're looking at the real motion indicator, what we really want to see is momentum either A, diverge to a bullish stance, or at least be neutral in terms of what the price is doing. And I'm a little bit disappointed to say that even though the momentum isn't bad, if you look at the green line, which is the 200-day moving average in momentum, the red dots are sitting right on it. And yes, underneath the 50. But if you look at the price, you can see we're well above the 200, and that would be that green line that you see right here. And not that far below the 50. So what this momentum is telling you is, we could say a bearish divergence, or we could just say summer doldrums. Nobody really knows what to do about grandpa just yet. Now, what is very clear, if we go to the middle chart here, is this is where your leadership indicator is. So this is really basically how it's doing against the benchmark. You certainly don't need this chart to tell you that it's been really underperforming the SPY. But what is interesting to me is if we just go back in time, it has not only been underperforming, except for little pockets here and there, the SPY for quite some time. But if you look at this zero line, which is this black line going here horizontally across, you can see that it has been quite some time, really not since December of 2023, that IWM has really shown any kind of leadership quality, and even that was short-lived. So if you add these two things together, A, you need to see some momentum, and B, you definitely need to see this catching up in price. So that would either mean that this would start to accelerate faster than what SPY is doing currently, or it could mean that SPY actually has a little bit of correction, and we see that ratio between the two come in a little bit with this starting to do outperforming. What we do know is this interest rate sensitive area and the fact that it's a small cap, right? That means they don't have the money that an Apple or an Amazon has to be able to actually buy back their own stocks in size. This really is going to be the measure of what happens in the US in terms of the economy, which is why at this point, we cannot fully dismiss recession, right? Because this is not looking all that great. But if we go back to the price, the last indicator I want to show on you is very exciting because it's going to reset next week. We had been looking at the January calendar range. This is the 6-month calendar range, the green horizontal line and the red horizontal line. And look how sloppy it's been going up and down and all around it here, number one. But it is going to reset next week to the July 6-month calendar range. And if you look at something like SPY, you can see that once this took out the 6-month calendar range way back in February, other than one correction right to it, it's just flown. And we're going to look at that chart in a moment. Whereas this isn't really getting going at all. So what happens when it resets is, one, we have a whole new area to watch for an instrument to either break out of or fail, or kind of do a fake out, breaks out and then fails it again, or breaks down and then breaks out above it. So it's important. And it also means that we'll have a good level based on the last 6 months, or this one we're looking at now, as somewhat pivotal. So that's 201.55. And if you look at the 6-month calendar range low, we've not done great, but it's not like we're horrible at this point. So essentially what we want to see right now is, if we add all of this together, is the squeeze that a lot of people are hoping to find in this IWM. And I would say it would start with, well, it would start with 2 closes above the 50, right? That would be the first one. Then we'd have to get through 205. And ultimately, if we get any kind of close above 210, that's when things could get fun. All right, so if we move to the next chart now, it's going to be SPY. And I feel you have to see this because not only, obviously, is this done so well, but this chart is the benchmark of what we're going to weigh everything. But you're also going to see me do something if you actually have the plugin and you want to look at SPY versus something else, not against itself. What you simply do is you just go to the chart settings here, and under leadership, and I'll have to change this back, obviously, instead of SPY, we're going to change it to TLT. And what that's going to do now is going to give us a good assessment of risk, so that for people who are terrified that things are getting long in the tooth, maybe this would calm you down a little bit. So first of all, these 2 little doji days, and even though the day's not over yet, these doji days, sometimes when those happen, you have one of 2 things can really occur from a percentage-wise probability, high probability. So that we can call them shooting stars in essence. And so essentially what that means is that this could be the top. I mean, it could be. We're not saying it is. I'm just saying this kind of formation is interesting to me. And what it means potentially is that if we have a gap lower, we keep going down, maybe is your correction. Just to show you what I'm talking about, here's your 6-month calendar range high here, right? Going back from January, which will reset next week. So we got a long way for that major support there. Or we could get easily a gap up. And who knows why that would happen, but nonetheless, it's a possibility. And those calls that we're starting to see from some analysts at 5,800 or even 6,000, I've seen crazy numbers. Who knows, right? But in the meanwhile, we go down here. This is now what I wanted to show you is the leadership chart instead of the benchmark being SPY, since we're looking at SPY. We're going to look at the benchmark as the long bonds or the TLT. And in a risk-on environment, you want to see SPY outperforming the TLT. So we have 2 takeaways from that. Number one is right now, it does seem like the risk-on is the risk-on. And even though we've had a couple of up and down corrections over it, it really hasn't done any major breakdown, like it hasn't broken down here under this black line, and it hasn't really gone through this, it's gone through the Bollinger Band, but it hasn't really flown either. So we're sort of like showing this sort of gentle step up that we're seeing here in the SPY versus the TLT. So your takeaway is either the SPY continues and TLTs drop more, which means the Fed's stance on more hawkishness would really actually almost be good for the market, or B, if we do see this kind of correct a little bit and we do see this start to underperform the TLTs, with anything other than the gentleness that we've seen, and if you look at this Bollinger Band here, it hasn't really broken the Bollinger Band or this black line, as I was telling you before. Not only does it tell you, hey, it's time to be really cautious in the market, but it could be finally the time that people are looking at for buying bonds, which has been so out of favor, except for these little rallies for quite some time. Number one, but even more importantly, economically, probably wouldn't be a great sign for the economy. Now, in terms of the momentum, same thing. We made a new high, but look at the momentum. Momentum is not keeping up with these new highs. Some are double drums, maybe. But for now, what we're going to say is that it's dicey. It's 50-50. This could continue to fly, or this momentum could be a little bit sign of a bearish divergence along with the shooting stars. And in which case, obviously, you'll know what to do now that you've listened to this. So what I'm going to do now is go to my next chart here, which is going to be XRT, good old granny. You can't show grandpa without showing granny. Whoops, no, I did not want to do that. So I'm going to get rid of that. Sorry about that. I want to do this right here. But what I want to do is I need to go back. So you're going to get to see me again. And we're going to change this leadership here from TLTs. We're going to change this back to SPY and close that up and close this up. So now we're back comparing this to what we should be comparing it to. And Granny, come on, lady, she just does not look good. Grandma does not look good. Now, it is, remember the IWM in the 6-month calendar range was sitting sort of right through its recent price action of around like 199 to 202. This is actually a little bit below that. And since we've been up and down and around and we've gotten some nice follow through. So that's good information. This is even before it resets. Hopefully it'll be even better information in another week. But what it's telling you here is that if we continue to break down and we get under this like 72.90 level, this is just really, I think, I don't care what anybody says, showing that the consumer is hurting and feeling the pinch, even with CPI and PPI potentially coming out lighter. Those numbers don't necessarily really reflect, right? Now, if you look at the leadership here against the SPY, really bad. We had kind of a little mean reversion here, but it didn't take you very high on the price. And now we're starting to break down under that Bollinger Band again. So that's telling me here that this is just getting weaker against the SPY. And then in your momentum, we are also here now starting to wane in the momentum, breaking down under the Bollinger Band, which we've been below before, but now we're below everything. We're below the 50, we're below the 200. Look at how we're still above the 200 here. So momentum negative, certainly leadership negative, price action negative. It's hard to stay very, very friendly other than for the MAG 7 stocks on anything else right now, unless we see some real shift in the next few weeks. Okay, next one we want to go to though is I don't want to get everybody depressed. So I wanted to go to a member of the family that actually I think is looking pretty promising. And this would be biotech. So let's start at the bottom here. So first of all, biotech, you can see that the momentum, the 50 is above the 200. They're both in bullish phases. The momentum is basically, I wouldn't say in any kind of bearish or bullish divergence, but sort of in line with what the actual ETF is doing. I like biotech. If you look at certain stocks in the area, it's looking pretty good, Amgen being one of them. And it also kind of fits with my whole thing about the vanity trade and the obesity drugs. And, you know, we do have a lot of research and development happening with some of the areas that we've long waited for, like Alzheimer's, for example. A drug was just recently approved by the FDA. So this is an exciting sector because it can be cyclical and non-cyclical. So let's take a look here. So we've got momentum in line, not quite outperforming the SPY yet. It did for a little teeny bit right here. So not only do we want to see it outperform, but we really want to see it take out this Bollinger Band as well. And if we move up to the price, we corrected perfectly to the 50. 140 has been really the area that this has not been able to close above. So I would say potential starter in anticipation that we can get there, breaks under 135, forget it. If you wanted to wait for more confirmation through 140, that would take out the January 6-month calendar range. And then we could see what happens when we get to the July. So that's a good part of my family right now, other than, of course, SMH. And I didn't want to take too long. I didn't want to show you Nasdaq, but it looks very similar to the SPY, of course. The Dow and Doge Industrials having, you know, a little bit of issues here, but nonetheless, you see to me what I think is the most important factors to try to figure out what to do next. Now, let's move over to silver, because silver is an interesting metal, right? Because it's going to be impacted by inflation. And, you know, remember, looking for inflation in all the wrong places kind of thing, as I said in the very beginning. Geopolitics are a huge risk to inflation still. deglobalization, which is happening. I'm not even going to go through all of the different factors. It's been outperforming gold. That's a factor as well. But also the industrial uses and the amount of silver that's going to be needed for AI and for data centers. All of this is making me extremely even more bullish than what I already am. So let's see if the chart supports that. Again, momentum, yeah, but we're going sideways here. We had a nice gap. This is SLV, by the way. So the cash chart would be showing you at $31 an ounce. So we can say futures really needs to hold between 29 and 30, gets through 32 as it's consolidating here above 31. I see no reason why this can't go to $36, $37 in time. But nonetheless, you can see here in the momentum is hanging tough, but it's not wowing anybody. That doesn't necessarily mean negative to me. In fact, when silver has looked really bad, it's been the best buy, right? So it's a little bit different than a stock. And if we look at the leadership, it is outperforming the SPY. But again, it hasn't really been, except for right here in May when it made that nice move above the Bollinger Band. So you've got room to the upside here. Nominal risk to the downside, inside day forming today as I'm speaking to you. So if you're looking at SLV, I do not think this is too late. And I also think it represents not only the geopolitical stress, but like I said, if things are going to be continuing in the form of technology and data centers and the stress, and even EVs and Tesla, silver and even solar panels, silver is definitely going to be the ticket to move higher, unless, of course, we go into a major recession, then all bets are off. Now, I wanted to also take us out of the country. We're not going very far, mind you. I mean, I could sit here for an hour and show you charts of South Africa, which I like because of the mining. I could show you the charts of India. I could show you the charts of Brazil. I could show you the chart of China, which was coming back a little bit today. But I wanted to focus on Mexico. And the reason why I wanted to focus on Mexico is because you had this bizarre sell-off when the new president was elected. Even though the country knew that she was coming in pretty much, and nothing about her policies would indicate that Mexico is going to go down the tubes now that she is the president. I think it was just the uncertainty. So it's no surprise to me that we're starting to see some stabilization in the price, but we're still in a bearish phase, mind you. But notice how it's going above here and outperforming the SPY. Looks like it could start taking out that Bollinger Band. And if you look at the momentum right here, it is not in a negative divergence nor a positive divergence, but it is moving up a little bit. Clearly, what we want to see is this take out these moving averages, but it's not necessary. So the way I'm looking at this right now is we saw a nice move up today. We kind of cleared all of this basing action that we've gotten since the beginning of June. And if these levels of above 58 continue to hold, I'd say that could be another really good opportunity in not only a country that borders the United States, but is rich in a lot of natural resources, which clearly we need. Now, I want to switch gears again. I've only got a couple more to show you. I mean, again, I could sit here and talk to you all day. I've got so many ideas. But I've tried to bring the best ones. So this is blockchain technology. And the reason why I really like blockchain technology is that even while Bitcoin has been selling off, this really did not go down very far, number one. So it's well outperforming in terms of the crypto itself. It is a shared digital ledger, right? So it's really what's used for the money transfer, and it is apparently incorruptible way to record transactions. So this blockchain technology, if you believe in a crypto future and in a digital future, then this would have to be a part of that. So I like this chart. And so I'm looking here at the bottom. We've got momentum waning a little bit here. That's a bit concerning. But then again, momentum all over the board looks to be pretty weak. We're underperforming the SPY, which means if you were just now waiting for some kind of entry, you'd probably want to see it outperform. And in this consolidation zone, if I just bring this in and we look at the high back here, which was in March at 37.21, and we go to the high here, which is at 36.75, you can see that we're over the 36.75, even if you waited a little bit, could really start to look interesting here. And I just want to note the 6-month calendar range high, which is all the way down here, is going to reset. And once it resets, it will be interesting to see, again, whether or not this gets a follow through. But this is definitely, from a long-term standpoint, one of my favorite picks. And I'll just add one more, since I have been definitely on the what the heck is wrong with Kathy Wood train with her money management skills. I'm actually now starting to think that the chart looks interesting. We got through the 200-day moving average. We're still obviously only in an accumulation phase because the 50 is below. But look at the 6-month calendar range low, right? So this was the low that was made in January that we broke below. I mean, not to mention the fact that it just looks so bad compared to pretty much everything else in terms of performance. The contrarian side of me says, well, maybe. And I like the fact that it's over the 200. I just talked about it, by the way, on Fox. But really, this 6-month calendar range low is intriguing to me. It could turn out to be close to the 6-month calendar range high next week that we would want to see break out. And we are outperforming the SPY a little bit here, number 2. And number 3 is, even though we're still not through the 200 like we are here, we are starting to see a little bit of a pickup in momentum. And in this fund, there were a lot of stocks that just looked so bad going into this period of time, but now starting to look better, like Tesla and Coin and Roku and Palantir, CRISPR Therapeutics. A lot of this stuff could wind up giving this an opportunity with a very low risk, by the way, to under 44, a move up maybe even to 60 is kind of what we're thinking. Okay, so that's a lot of information, but hopefully it gives you a good blueprint for you to listen to and understand that these plugins will help you determine not only if it's time to go in full guns, stand aside, or just take a little bit of a teaser position to wet your lips to see how things might go, particularly as we're looking at those small caps. Okay, thank you so much, and bye for now.